we have to solve the token problem first, and then the quality will come. It takes time, right? But like we've been selling garbage for 5 or 8 years, wherever you want to say. People think that crypto is a scam because it really has been, to be honest with you. Like it's not really a controversial take to say that pretty much everything I've seen is really a scam. We're trying to solve that. When we do solve that and improve tokens, I do believe that liquidity will come.
Nothing said on Lightspeed is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed. Hey guys, welcome back to another episode of Lightspeed. Today I'm joined by Tom, the CEO of SOAR. Glad to have you on, Tom. I guess before we start digging into what SOAR is and talking about it, this broader discussion around tokens, token holder rights, ownership coins, internet capital markets on Solana, but also just on chain generally has become a big topic within the space. And I know you and what you're building at SOAR have become a big part of that. So I guess for the listeners out there who may not be familiar, I'd love if you can give some, quick background on sort of the why and, why SOAR and why you got into this space and, maybe a little background on yourself as well.
Totally. Would love to. So I'm Tom. I'm the CEO of SOAR. For the people who don't know us, our goal is to allow anyone, anywhere to tokenize their business and fundraise on chain, and also give retail, myself included, access to startups early on. I think that the idea of companies going public at $1 trillion valuation is pretty criminal, to be frank. In terms of, what we're trying to solve and kind of our opinions on the space, most importantly, been in the space for going on almost 10 years at this point. I think the promises of what I came here and what attracted me to crypto in the first place was technology and trying to improve the financial system. And unfortunately, what we ended up with were utility tokens and governance tokens and all these things that at the end of the day, someone got rich. It was primarily the teams who kept all of their equity and kept all the value accrual to one silo, which was their equity. And we all kind of got stuck here and left here and forgotten about for the most part. I do think that the last year we've seen kind of things like Padre, where they got acquired, and token holders, which that was a public fundraise, that was an ICO actually, got left behind, unfortunately. Tentra was a more recent one where the Vector team kind of went off and gave up basically their best product. Once again, token holders got left with nothing but a foundation that held some worthless assets for the most part. So I think we're seeing this new phase of crypto where companies that have tokens are acquirable for the first time, right? But unfortunately, what's happening is that the token is not getting acquired or not getting compensated for the holders who actually supported these projects and built them to be what they were. Just all the good quality stuff, the assets are actually getting poached. So we're trying to intrinsically tie those two things together so that if I'm holding token A and they are successful and I'm betting on them to be successful, when they are successful, I actually reap the rewards of betting on that team, which I think is quite important. That's how investing anywhere else works, to be honest with you. The whole world works. You put money into something. If it's successful, you get a benefit, right? In crypto, it's like you bet on the best teams and you end up getting screwed worse than anywhere else. It's amazing.
Yeah, definitely there's been an issue with alignment and just seeing tokens really represent kind of like the value growth that maybe the businesses behind them have experienced. And that's, plenty of teams I think are aware of this. Like as a community, it's become a big topic now. Maybe before we get into specifically what SOAR is building or, your particular solution to that problem or set of problems, I'm curious, like, the whole craze around meme coins and, just sort of like loosely attached tokens to things. Do you think is that like a real net negative for the industry broadly, or was this more of like a necessary phase, like a path dependency sort of thing where we kind of had to go through it for people to realize, hey, we need to really set up tokens that have actual meaning and connection to the businesses behind them. And it sort of kind of prompted that conversation almost.
Yeah, no, that's a great question. So I have a lot of takes on that point. I think that in some regards, like things like Believe, which, like you said, were like basically meme coins loosely associated with businesses, they did get the space thinking in a more technical way. Like I saw a lot of shift from 2024 where we were bidding gold and all these, they were not really AI coins. Let's be honest with ourselves. They were jokes. But what we did see is kind of return to what I thought when I got into crypto, I liked. I liked looking at companies, looking at different technologies and seeing like, oh, this is actually intriguing. Unfortunately, to be honest with you, short term, I will say that it's completely been a net negative. Like the reality is that, unfortunately, we don't really call ourselves ICM, but that's what we get grouped into. The ICM community is pretty washed out. A lot of them got burnt really bad on Believe, primarily on Believe the token themselves, but also a lot of the adjacent plays in that ecosystem. So it's a mix of like washed out capital, but I think the core ethos and the soul still survives. In that there is a huge amount of people we're seeing kind of right now bagged where people want to build tech tokens. They're sick of like bidding on the 15,000th meme token, on Pump or wherever else. So there is that thirst and desire. It's just getting people over the hump to understanding like, hey, listen, these aren't like 1-day plays or 30-second charts and things like that. You can actually buy into these tokens. You're buying into a company that over the long term might succeed, and you actually have exposure to that. So it's like, it's hard to say if it's a net negative or positive yet. I think we'll see in a little bit longer. But I think the reality is that what people want is companies. They want tech. We just need to give them, the intro, introduce them to it, and give them the exposure. But it takes time.
Yeah, and maybe one last is like, do you think there's sort of like some necessary growing pains there from, all the launch pads and products kind of around meme coins to this point are all around, you know, you want to be in the hot new thing for either that day or that week, and then sort of in and out. They're instantly tradable, kind of instantly liquid, and that's kind of it fuels that like high velocity of in and out of different things. But obviously, if we're talking about founders raising for new businesses or actual companies that might have a 10-year sort of plan in mind or something along those lines in terms of the business that they're entering. You don't necessarily want all of the people interested in the platform to be on that sort of in and out mentality. So I don't know, is it difficult to kind of get into this niche where we're at this weird crossroads right now between people who are used to playing the short term game and we're trying to figure out and sell them on the long term game really.
Yeah. So the funny thing is that the high frequency trading you're talking about, right, and the ultimate like velocity that Solana has, like the most volume, like very short attention spans, but it's quick and fast and high paced or fast paced, right? Um, that stuff is great for a model like ours, which enables you to fundraise off of volume, right? So there is some like net positives to that behavior. Unfortunately, at the same time, what we're realizing is that when we go and we're launching our mobile app soon and we're really trying to target Web2, the issue is that like most of my buddies like that don't really trade crypto but might have a little bit of exposure, like they text me once a month about something that they're holding in crypto, right? They're not looking at charts every 1 minute or 2 minutes. Like it's like once a month, once a week, whatever it is. So it's the high velocity stuff is great for the trading and the fees and things like that, and for these teams to fundraise. But unfortunately, like you said, the attention dries out so fast, and what you end up with is like the normal guy who's like not high frequency trading and not using Axiom and all these different terminals, they kind of look back and they're like, wow, like everything I bought is down 90%. And it's really bad for onboarding. It makes our lives a lot more difficult to onboard. So we've been thinking a lot internally about like, how can we present these tokens and these opportunities to outsiders that aren't MCT and give them a reasonable chance of like doing well and performing well without having to constantly look at things. So yeah, I mean, you basically just have to look at everything like an airdrop where you have like a little bit of a run up and then it like consolidates for a long amount of time. And then there's some opportunities there. That kind of seems like what every ICM token is. It's not the worst thing, but yeah, it's not great either. It's hard to kind of navigate, I guess, on our side.
Gotcha. I think that makes sense. I think we're seeing a lot of the platforms kind of in this realm are learning those same lessons, and there's a
Yeah.
lot of there's a lot of conversation around the sort of the short term outcomes that happen, and how that maybe drives the long term approach. So I think we'll have to keep sort of learning by experimentation.
Right, absolutely.
Guess getting to the experimentation, then let's talk about the product. I guess, can you walk through like what's the core sort of differentiation for SOAR in terms of like offering this, launchpad and like sort of startup raising mechanism versus like other launchpads or other platforms out there that exist in a similar sort of realm?
Totally appreciate it. So the most important thing is that when we started building SOAR, we threw out everything I've known about tokenomics. I've been doing tokenomics for a lot of different teams for a long time, and I had to completely wash my brain of everything I knew, everything I thought about, and then we went back to fundamentals. Like our goal has always been to onboard Web 2 companies, along with Web 3, but we wanted to focus on Web 2 and bring really cool opportunities to the space that we haven't seen in a long time. And the most important thing for us was thinking about how tokens operate currently, what their flaws are, and how we can fix all those things, right? So that comes from the holder side, which is value accrual. That comes from, dilution, these vesting schedules that I think are very cancerous. And most importantly, it's opportunity cost. So it's all like economics, to be honest with you. It's the fact that teams traditionally have a token and they have equity, and the opportunity cost of myself or anyone else who holds the token on the team actually going and selling it is simply just getting a better price in the future, right? Like I'm not giving up equity in the company, not giving up anything, to be honest with you, just future value that might be higher than it is currently. So we needed to get rid of all of those things. And the one of the biggest things that we thought a lot about and we talked to a lot of teams about was fundraising, like future fundraising, right? Like, in crypto, it's like I always laughed about it, but it's so true. Like your end of your company is almost the day you launch your token. Like TG is kind of the end, right? It's like that's the big moment. You cash out through a market maker, through your foundation, something else, and the rest of it doesn't really matter much, man. You kind of try to keep your value up for a little bit, but that's kind of the end. So we had to fix all those things and enable these teams to say, hey, listen, post TG, post token launch, I can go fundraise again. I can actually sell something to VCs or private investors, whoever it is. So our model works very similar to Web 2 fundraising. We thought about it from the perspective of, in Web 2, I don't go and sell all of my equity on day one. Why would I sell all of my tokens on day one? It doesn't make any sense, right? So we give the power back to the team, to the founders, and enable them to use the token in a process that gives value to the token holders through essentially this debt mechanism. The debt mechanism is always tied to, it's a senior debt that's always tied to the circulating supply of a token. So for example, if, assume you have 100% of tokens, if the public owns 10% of the tokens, there is a senior debt that is against the company itself for that 10% of value. So that if I go get acquired tomorrow, that 10% is able to be recuperated by the token holders, so they actually get value out of it and value in holding the token itself. It's really not that complex, though, other than that. I think the easiest way to think about it is basically an on-chain cap table. You might have some investors here, maybe they hold 5%. They would have either equity or they can have 5% of the senior debt that is tradable. Alternatively, like I said, token holders would be another bucket of that. And the team ultimately owns, normally, the majority of the tokens, which is their value in the company, right? No different than I own the majority of SOAR or a large portion of SOAR. That will be represented just in token form in our model.
Gotcha. I think that makes sense. So you basically, you're creating this way for the token to sort of represent some what is essentially like an ownership stake in the real equity business. How, I guess, how challenging was that, and like maybe how was the model shaped by kind of perception of like regulatory constraints there? We're seeing a lot of teams kind of experiment more because obviously
Yeah,
the current admin in the U.S. has been a lot more favorable, and in
correct.
various other countries. So like, where are you feel like you're pushing the envelope a little bit, or is it like all within sort of the accepted kind of legal practice today? I guess maybe speak to me about that a little bit.
Yeah, great question. So I'm an attorney. I didn't really give a background earlier, but passed the bar in 2020, and always it was a founder. I honestly never practiced much. Used it here and there for businesses, but never was a practicing attorney. I think that one of the things that turned me off and kind of my motivation behind SOAR in a lot of ways is I left the legal practice because of the injustice, I would guess I would call it. It's a very gate-kept industry. I'm sure people realize that now. There's starting to be some AI products that actually solve this, but the reality is that attorneys don't want you to make their lives easier. They want to get as much fees out of their business as possible, and they hold all the control over that, right? So they're able to stop you from going to court and representing yourself pro se and things like that because they can, and that's just kind of how the world works. And it's unfortunate. It was a big thing that really turned me off to the legal practice in general. But yeah, to that point, we have about 20 years of legal experience on our team internally. I think that was quite important. We believe that like this token equity issue it's a legal solution, right? I don't believe that you're going to have much success seeing people that aren't attorneys or understand the legal field very in depth being able to solve that. Just because I'm US, I've worked on securities a little bit before. One of our other team members also has. I think that you just need to understand this whole model very intently. In terms of like pushing the bar and pushing the limit, I would say that we're certainly taking some risks in some regard, but at the same time, our model is by all definitions fully legal, completely compliant. There is no issues with our model at all. We've had it vetted by other law firms as well, just so that's not just me putting a stamp of approval on it, right? But at the end of the day, like anyone knows in this reality, in this world, is that it does come down to kind of your motivations, right? What your intents are. Our intents are to create a better system for traders, for teams to fundraise, and for everyone to get a better outcome. I think that the reality is that the governance argument and the utility arguments and all of these different things over time, have they really gotten us good outcomes? I would argue heavily not. I would argue that we've had a lot of really bad outcomes come from that. And I think that the one thing I do believe is that the justice system and the court system will always favor good outcomes for participants as long as there's good intent. We have great intent. We're really trying to improve disclosures and financials and hold these companies accountable for what they're actually doing under our model. We're able to do that through our debt mechanism. We can go to them and say, hey, listen, are you doing everything in your power to actually improve the experience for your holders and things like that? So it is, like I said, everything's a risk. I mean, the reality is that they went and got, CZ from overseas and brought him into the US. The US is all powerful. We're not hiding. We're right here. I live in Florida. We're trying to be as open and public about it because we think we're doing something great. I really do believe that we're trying to improve the world, improve tokens, improve founders and Web2's ability to fundraise, all of those things in one.
I love that. Maybe talk me through. I'm just thinking about it as you spoke through the model in terms of like to me it makes sense, the fact that there's this sort of debt obligation that the business, the real equity business has. When I think about like, you've got a live trading token for what would probably have traditionally been, like a private company, so to
Yeah.
speak. So there wouldn't be something live and trading, but you could maybe OTC a position into, buy something from an existing investor, something along those lines. There wouldn't be really much of an open public market. So, but this obligation really hinges around, either future raises potentially, or an acquisition by another company, right? Because that sort of sets okay, we're selling all the assets, we need to pay off this debt obligation. That creates a very tangible value to how that token maybe should trade as a result of that. How do you think about these things in terms of like how users are going to interact with the tokens, just given the model, right? Because it's not like it's quite the same as a live sort of equity, but it does have like those touch points to, if there's another raise or if there is an acquisition, I would you would expect to see sort of activity on the token, or like interest generated around it.
Yeah. So the one thing to note is that I think people always get it's funny, people always get debt confused, which our model is it's a senior debt based on percentage of company value, right? So no different than like it's senior debt for 10%. It would be the same exact thing as equity of 10%. That's how our contracts are written. So it's always tied to a percentage of the company based on circulating percentage. First and foremost, the reason why we did the debt as opposed to equity is because of actually disclosures and notices is one of the main points. So, for example, I know there's a lot of models out there right now that are doing this equity and all this, right? So, for example, I think Rainbow is one good example where they're putting like 20% of their equity into their foundation. Now, the problem with that is, to be honest with you, and this is no dig at Rainbow at all, but the problem is that people don't fully understand equity and how you can dilute equity quite quickly, right? So, for example, for SOAR, we have 100% of equity basically owned by the team right now. We could take, a huge debt position against our equity. And at the end of the day, the shares will simply be worth at the time of an acquisition or any type of merger, right? Same thing with you can just dilute equity traditionally through, minting new shares, creating new shares. So I think that it's important that our model protects people at the highest level. First in liquidation preference, UCC1 compliant. You can even see some of these debt mechanisms. You can see them, Secretary of State. It's quite important that we keep that highest threshold because our token holders, myself, not everyone is privy to all the things that are occurring at all times. Like I said, between debt and dilution. Kind of going back to what you were saying, the functionality of the token itself in terms of versus the company value, it's certainly going to be out of line at different points. And I don't think that there's any way to solve that because the reality is that liquid markets are a lot different than private markets, right? For example, any startup goes only up in private markets is the reality. You just fundraise higher and higher and higher. In a liquid market, things go up and down. People lose interest. There might be some news that comes out that's about a public company that's related to this private company, and people end up reacting adversely to it. We're not trying to make it so that everything is always one-to-one with the private valuation of a company. I don't think that's important at all. Our most important goal is enable that there's, like I said, a recoverable value for token holders, that they actually get some intrinsic value in the company itself. We solve the two funnels where you have equity and token, in the value accrual question. And also like the marketing spend, like, Hyperliquid and Pump has spent so much money buying back their own token. I think we'd all be better off if they actually went and marketed their products to outsiders. But yeah, I mean, the reality is that, for example, if you own, 1% of a company, and it's at, say 10 mil, okay, or say 10% of 10 mil. So that gives you a $1 million position, and they go raise at 10x that valuation. You're going to see some price action. That's just the reality, right? There's going to be some weight that pulls one or the other up. And I think that that's the cool thing about our model is that, and what we tell a lot of teams is the reality is that your private valuation can pull up your token value. Markets are relatively efficient, or alternatively, the token value can actually pull up your private valuation potentially, right? It's a push and pull formula. We just want to keep everything relatively in line and not have these huge discrepancies between private val and what the token's actually trading at.
Yeah, I think that makes a lot of sense. I think we're finding out within the crypto space, at least, there's this desire to make everything tradable.
Yeah, tokenize everything.
Yeah, then the natural sort of result for some things is that lots of private markets sometimes there isn't, they might have the last fundraise round or the most recent fundraise round, but it doesn't mean there's necessarily like open or active liquidity that's like willing to place a bid right now because it's not a publicly traded thing. So there may be a bunch of markets that could have a price, but they just haven't historically. So figuring out how sort of new market participants react to that may be.
It's a long game. It's the reality. It's a really long game. Like in terms of trying to get to the point where there's enough liquidity and quality liquidity that comes over. Private equity is a huge market. It's not over here yet, right? And like, sorry to jump in, but like the reality is it's so difficult, to be honest with you. It's so difficult to convince people, hey, listen, like we have to solve the token problem first, and then the quality will come. It takes time, right? But like we've been selling garbage for 5 or 8 years, wherever you want to say. People think that crypto is a scam because it really has been, to be honest with you. Like it's not really a controversial take to say that pretty much everything I've seen is really a scam. We're trying to solve that. When we do solve that and improve tokens, I do believe that liquidity will come. but you can't expect liquidity to come immediately. You have to really outreach and you have to do all of the BD. And that's what we're trying to do with our product, is really try to onboard this new wave of liquidity, but we have to give them something of quality. Like, and that's like going back to the question before with Believe and stuff, like we keep ending up in the same trap of just garbage on top of garbage on top of garbage. And we're shooting ourselves in the foot. I mean, that's just the reality.
Yeah, I would agree with you there in many respects. And then often you see sort of participants within the space say, well, maybe I should just punt on the latest meme coin, right? It's like effectively the same thing in many cases. I think we see the back and forth kind of those ideas as we've matured a little bit, or slowly are starting kind of to mature. Maybe one last question in this realm is like, there's a lot of potential future outcomes. I think I've seen a lot of conversation around like, do dual equity token models continue to exist in the future? Do we go all token? Do we go all equity, but they're just on chain as tokens? Like, I'm curious what you think there, because there's some competitors who are going the different approach where it's like, no, there's no equity actually, and it's all token. There's some who are doing, there's some protocols who are doing, the foundation and the token are aligned under the same sort of like real world structure, under the same kind of like, the token is underneath the business, or the business is underneath the token, however you want to, slice and dice it. I'm curious what you think there. If you have a strong opinion, like you think just all businesses are going to come on chain, all equity will be tokens, um, or we'll continue to have maybe this kind of diverse offering, and it won't be so clear cut.
Yeah, I guess I'll start with, I do believe, which I've had a lot of smart conversations or good conversation with smart people, in terms of network tokens. I do think that network tokens might fall into their own category, right? So I'm going to pull them out of this conversation. For the most part, outside of that, pretty much everything is a business, right? Like most of the things that you're trading day by day are all businesses. They have an equity component. They have a token at the end of the day. I don't believe that, first and foremost, I do not believe that we're going to continue down this dual token equity path. I believe that both of those worlds will converge. I do believe it'll be our model or something very similar, because at the end of the day, our model is directly tied not to 1% or 5% of the business. You're tokenizing the entire business, yet you just hold your share of it, no different than like a cap table, right? And I believe that that's the best way to do it. I like the idea of, for example, one of the things that we're solving is, like, if you're an employee of a company, you would traditionally get these illiquid options, right, for the company. In our model, you can actually get something that's liquid. You can use the liquid market over time. I think that's cool. If you get your 0.5% or whatever it is, you're able to use the liquid market for that. And the company has deference over that, just like founders do and things like that. And as you sell your position or move out of your position, you're just giving up value in the actual company itself. So I like the idea of driving value back to the actual equity. I just like having all participants, i.e. token holders, have a participation stake in that. In terms of, yes, I mean, I've seen a lot of conversations about the idea of removing equity and kind of like just removing equity completely, like separating it out or just forgetting about it as a function of society. My super hot take is that is what we've done wrong in crypto for so long. Equity has existed since, I believe, 1609 or right around there. The whole world is built on equity. If you think that crypto and our little tiny market in the corner of the world is going to remove these structures that have been in place and that the whole world works on, I think you're insane, to be honest with you. Like, that's my genuine take. I think that we're going down the wrong path when we say things like that. What we need to do is just follow and use the formats that are already working well in Web 2. No one complains about equity. No one complains about shares and all of these different things, right? No one complains about debt. All of these things work extremely well in the real world. We need to adopt those and just put them on crypto rails. And that's really what our model does. We're not trying to change or reinvent the wheel. We're trying to use the models that have worked for every founder for hundreds of years, that work for us, that we use ourselves, and just bring those on chain and then provide value to all of the participants in our ecosystem. I do think, just as a side note, I do think what MetaDAO is doing is really cool. And the reality is that they're basically just giving up all of the value in their company, right? That's just what they are. They're tokenizing the entire value of their company and then letting it be controlled by or at least the treasury and the IP be controlled by a third party. I think that's incredible. I will say on that note, most of the founders I talk to would not do that or do not want to do that. But I think for the demographic that they're working with, it's awesome. Like, that's great. There's a lot of value to be accrued there, to be honest with you. I just don't think that that's ever going to be the end all be all solution, because I don't know if you get it from me just from talking, but I'm quite an arrogant individual, as are most founders at the end of the day. We believe that we're direct, and we believe are correct, and that we're directly correct. And it's going to be my way or the highway a lot of times. I want to call the shots. Down the road, as we get bigger, we will probably give up some of that decision-making power to, whether it's advisors or shareholders, etc. But right now, early stage, we want to call the shots like most founders do. And I don't believe that, Tesla with Elon, or, Steve Jobs and Apple, all of these things, these companies would never become what they were without having that arrogant founder early on that was in the trenches making the calls, right or wrong, but moving quick to do so. And I always say that, like, you have to be careful with these models where you start taking power away from the founder, because the reality is that the good founders are just going to be slowed down by these problems, right? So they're going to be slowed down by outsourcing decision-making power. The bad founders, you can't save them anyway. So what are you wasting your time trying to do? You can make the bad founder maybe marginally better. You're going to make the great founders marginally worse, if not significantly worse. So I'm like, founder autonomy is a big thing to me. If you haven't got the picture yet.
Yeah, and I think that makes a lot of sense. That's certainly been a big conversation that we've seen from, founders who are getting into crypto and maybe trying to kind of get into the decentralized sort of rabbit hole, or the governance rabbit hole. And obviously governance has a long history within crypto in terms of the battles there. So we don't have to get into that one. I think it takes
It
too much
doesn't
time.
work. It's kind of the short story about it, to be honest with you.
But
In
I do
some
think,
forms it does, but
yeah,
yeah.
I think really either side, wherever you're building kind of within this space, there is a general kind of across the board consensus that, like, things like equity rights are really like what people want, and they just, if they were a token and they were on chain and they were easily tradable, then that would be like all the best of all the worlds. And it seems like that's what everyone's really working towards. It just, the specific model is, there's a lot of differentiation there, at least. Maybe you talked a little bit about founders, what they want. I want to talk to you about founders. Like, who are some of those ideal founders for SOAR? Like, is it real world businesses like coming and wanting to do a fundraise via this mechanism, or is it, still the guy building a DEX on the new crypto chain, or how are you thinking about that?
So I think that if you're not familiar, like, CPT Impulsor was our first launch. They've been just incredible, to be honest with you. They're a group of scientists led by a guy named Patrick Sang, who took Fubo TV public, was the largest IPO of, I believe, 2021 at the time, multi-billion-dollar IPO. Super, super cool founder, very well connected across like 3 different continents, quite incredible. He is out in the public, like, I would call it building in public, which is amazing. It's really good for their token holders, because they can see, like, the guy's working, right? It's quite obvious when he's in 3 different countries in like the matter of 5 days. But he also has the background, he has the experience, he can talk to anyone, he can get himself in the important rooms. So he's like an exceptional example. I'm not expecting, a bunch of Patrick Sangs to show up on the door. We're going to certainly bang down people's doors that are like that, but it takes time to get those exceptional founders. What we're really just looking for is people that they thrive within a community. They can culture a community, right? They need to be able to market themselves. And I think that's quite important. Because if you can't sell your own product, like, you definitely can't culture a community and things like that. So trying to find this ideal founder, which is early stage enough that they're willing to take a shot with us, for sure. That's one of the things. They don't need a huge amount of capital as well. They're very, capital efficient, I would call it. It's quite important. And then the other thing is I love people that just want to change the world. I love people that just want to take a shot, be, obnoxious in their vision of, this building something great, and no one will believe them, right? Like, I don't think, Shane from Polymarket and people like that, like, they were arrogant when they started. They were just like, we're going to change the world and financial instruments and all this stuff. No one believed them, of course. No one ever believes you until you actually do it. So I love people that come with a grand vision, even if we have to break them down, which we do a lot of times. And we've had some founders come on and they want to do this and that. And I'm like, let's stay small picture, dominate the little arena that you are in right now, and then you can expand from there. Don't go too big picture first. But yeah, I mean, it there's a lot of really great founders that you would never expect them to be great. And like, that's the reality. I think that's one of the cool things. They're called model breakers in Web2, right? There are things like, I think Roblox is one of them, where no one wanted to invest in this idea until it was far too late and they were a huge company. And that's the stuff that our model can thrive on, is where no one else is willing to take a shot on these guys. We give them some capital, and you give the right guy like 10, 20 grand, like, they'll turn into something great. On the contrary, the funny thing is that we're seeing that right now, like, it also is a really quick way for me, and I think a lot of people, to kind of decipher how great you can be, right? It's higher pressure, it's higher stakes. So versus, like, where you take a guy that he's going to spend all of the VC money over 24 months and then turn into nothing anyways. We're seeing like the red flags in like the first week or 2 weeks or 3 weeks. And we're seeing the green flags on the great founders, where they take stuff in stride. They, for lack of a better term, they just eat shit and like keep working at it. Don't care that something failed. They just keep nipping at it, working at it, and find a path that succeeds. It's kind of funny. It's like a very quick founder test, to be honest with you.
How does curation play into the platform? Because I know you have, at least there's some verified and like at least some soft curation that goes on. I guess how meaningful is that to the product and like to some of these founders that you interact with, at least?
Yeah, it's a good question. So initially we thought of curation, and this is why you have to ideate on products a lot post-launch. Initially we thought of curation as a way for us to stamp something and say, hey, listen, like, we know these guys. We had met with all of our curated teams actually in person. Really got a feel for them. Like, do we see any red flags? Do we think that they're bad people? Luckily, we were 3 for 3, I believe, on curated projects to start. All really good people, all really good founders, working super hard in different, arenas. We, as of late, we've started to step away from curated being an on launch thing. And the big reason is I've seen a lot of the ICO products. I've seen a lot of the, these different companies and fundraising mechanics, whereby you go on, they have like one launch a week or whatever it is, or one ICO a month. And like, your whole product is surrounded by, if this fails, you already like put your stamp of approval on it. You're at fault as a platform, right? And I wanted to get away from that. So I wanted these founders to stand on their own. We wanted these founders to kind of do their own thing. We're not going to meddle in, the price discovery or the appreciation or like the community building of your product early on. When we see you thrive in public, we see you do great things, we'll happily put our stamp on you. But it's really hard. Like, I don't know if a guy's going to bundle his coin or snipe his coin and things like that until after launch. I can say like, you're a great founder, but I don't really know until post launch. So we moved it to at least a couple week, if not a couple month process, where we basically say, hey, listen, we think that you've done a great job. You culture a community. You've built a good product. You're working every day to improve that product. And we think that there's ultimately the big thing that we're trying to get to is the idea that this can be a massive opportunity, right? Because at the end of the day, businesses matter. I mean, we've talked to a lot of founders, probably talked to 50 founders a week. And of those 50, a lot of times 20 or 30 of them, you just are like, they'll never be great because their picture is so small, or their TAM is so small, right? They're attacking such a small market that it's like, what's the upside in a company that could only be worth, $2 million at its peak? So.
And then to follow that up, I guess, I think you kind of touched on it a little bit, but just trying to understand like, what does, and maybe you could walk through on like go through an example project that's kind of gone through the pipeline, but like what does an example of success look like, through the launch, through, just the founder themselves sort of building the community, and maybe how do you think about success kind of longer term? Because there may be periods, we talked about it before, right? The token may
Yeah,
not really trade
correct.
so favorably for a while. You might have to wait, longer down the road for big milestones to be hit. So how are you thinking about all those things?
Yeah, I mean, I think, like I said, I always go back to CPT. 'Cause I just think that they're the most advanced in our ecosystem right now. They're the farthest along, to be honest with you. And, you know, Patrick wanted to, he's been there, done that. Like, that's the reality. He is not fighting over money. Like, he doesn't need money. He has every contact in the world and every opportunity in the world. And one of the things when we met with Patrick a lot, and this was actually unrelated to even CPT when we first started talking to him, it was actually related to SOAR. Um, One of the things that we spoke about is his real passion to pass it on, right? So he's not a super old guy, but he's getting older. And the reality is that we're a pretty young team and we're quite hungry. And he wanted to kind of pass on the lessons and just the opportunities that I think he was afforded early on in his life. I think he'd make a lot of them, to be honest with you. I don't think he was afforded much. But when we started talking to him about, Impulsor and things like that and CPT, uh, he really wanted to try to democratize this financial system that he's partaken in for a long time, where he had exclusive access to all of these deals that no one else had, right? So he came to us and said, like, let's democratize, let's give access to people, and we obviously are on board with that. Why would we not? And so in the first, I guess the first week or so, they raised about 250K, which was, it was great bootstrap money or startup money for them. They brought on some amazing scientists from, I think, the University of Geneva. That might be incorrect, but Geneva over there somewhere. Um, great scientific lab over there that they really needed to get some of their products pushed through. They have already gotten a couple demos. They've signed a couple contracts. They just signed a contract today with a huge lab that does wireless technology. So, like, they've went from, and like I said, Patrick is one in a million, to be honest with you. They went from a lot of ideas, some early stage demos and products of these little drones and the charging technology, all the way to full mass scale production that they'll be starting in the new year. So, like, that's a one in a million story is the reality, but they're like peak success, use capital super efficiently. They had some private capital beforehand, which is cool because they could tokenize through us while they already raised some money. They'll most likely raise money in the future again, use our model so that they can give liquid exposure to their investors, or alternatively, they can just buy equity. So it's a perfect example of the whole model from start to finish. They might go public, they might get acquired, whatever happens. Assuming they succeed, I think everyone will be able to partake in that adventure. So it's fun.
Gotcha. I think you talking through, like, in this example, going through potentially a couple of raises, but also raising some funds via the platform and kind of having that equity token connection there. It is interesting. Like, that has been one of maybe a challenge within this space, is the fact that there's so many of these like equity plus token deals that exist. And so then, maybe you're a pre-existing founder or a pre-existing protocol, and you've got some of those existing arrangements. And so going to a new form, a new protocol form here, and then trying to raise funds from, sort of like new liquid investors and figuring out how to merge all of those different standards has been a difficult thing. It sounds like you've got a bit of an elegant way here. Are there other challenges that you think we're maybe still dealing with on the token side, in terms of, like, are there certain token holder rights or other kind of hurdles that need to be overcome yet?
Yeah, it's a good question. So it's funny. I think one of the things in the hurdles that we've talked about a lot about. I was just talking to one of our prospective investors yesterday, and he had a really good question about, like, if the token's trading at, say, a 50% discount to what the company's trying to raise at, what does that look like, and does that affect the ability for that company to raise, right? And, like, the short answer is in my opinion, no. And the reason being is that great companies are going to have great metrics to raise on. And, like, why would a liquid investor or VC, whatever, care that much about what a fairly illiquid public market is actually trading at the end of the day. And what I do think in the best scenario, and this will take time for this to play out, but the hot round nowadays, right? You're not having one or two investors. Like you have 10 people bidding up your round. Our model could enable those people who didn't get into the round itself to at least get exposure to this company early on through a public market. So I do think that there's some type of some interesting mechanics there for sure. But yeah, I mean, to be honest with you, it's every day is a learning experience. One of the things that we've spoken a lot about, and I think this will become an issue, we have a solution for it already, luckily, is that, sometimes an investor might come along and they don't want to invest in senior, like they don't want to invest in a product that has a senior debt against them, right? Or a company. So our model, luckily, is super dynamic. You can convert that into equity at any given moment. All we have to do is sign a couple documents. It's all private agreements, which is quite convenient. So that's one of the cool things. In terms of rights and things like that, listen, the reality is that I do believe in tokenized equity. Like I said, I think in a lot of ways, that's what we're doing. Obviously, it's slightly different for the reasons I mentioned earlier. If we can get to the point where you could just have tokenized equity and preferred and common shares and voting and all of that stuff, I think it would be excellent, because the reality is that you're not raising that much in your first couple rounds. And even though the public has a vote, it won't really matter much at the end of the day, right? Later rounds, as as the cap table gets more filled with new investors and you don't hold as much as the founders, the public can participate more in those votes. And that's just how private companies operate anyways. So I like all of the things in Web 2, man. Like, I think they all work really well. I've never, like I said, I worked with stars for a long time. I never had one come to me and be like, listen, man, this equity and share thing is just not working for me. I'd like to get rid of it. Like, it just doesn't happen. So what we always say is we're at the tip of the spear. We'll always be modifying, amending our model to be the best solution for companies and the most friendly solution for companies. The startup cost is nil. The efficiency is a couple minutes, to be honest with you. We can do everything super fast. Everything's enforceable. We put a lot of thought into it. This was like a 6-7 month experiment. It'll change more, but I'm quite bullish on our model. I think it works in the realm of pretty much every situation we've seen so far.
Gotcha. I guess, and when you think about kind of going into the future, like building upon traction and liquidity, and this sort of like probably newer investor base, I'd imagine a lot of the people who are day to day flipping meme coins are they may not really be as interested in like funding real businesses. But I guess how are you thinking about that wave of like potentially new investors or new set of liquidity that will come into this space to kind of make longer term bets? I think a lot of these platforms, it's really you're making more like a venture bet in many
Yeah,
cases. This would
you are.
have been like more of a private raise or something along those lines. So is this you have to inform and bring in new investors to the space, or do we just need to inform some of the existing participants? Mixture of both.
Yeah, and that's a really good question. And the reason why is because we've spoken about this internally a lot. And like I'm like I said, I've advised a lot of companies, and like there's a couple of lessons that I always try to follow, right? The first lesson is that you dominate your easiest to grab customers first, right? Until you get that group, whatever it is, that early demographic that your product's going to appeal to, like you shouldn't really branch out that much. In our case, we're taking kind of an 80-20 model, I would say. So 80% of our efforts are going towards crypto participants, trying to get the more fundamental people. And that might not even be on Solana right now. That might be on Ethereum, Base, for example, as well. Trying to pull those people over and say, hey, listen, we're doing something pretty novel here. Come check it out. It takes time, though. One of the things like we've talked about is that it's just so difficult because everyone is so hyper gambling in this world, like especially CT participants. You kind of got to give them like a table to play on, right? It's like, I always joke, like I yell at my teams sometimes. I'm like, we need to get more quantity out. They have to be quality, don't get me wrong, but we do need the quantity as well, because everyone in this space wants to participate and gamble and whatever you want to call it. And if you don't have any game to play at the casino, they just simply won't play, right? So we've thought a lot about that. It's really hard to balance those things. I do think we're coming upon a pretty good balance of enough launches to keep mind share, keep momentum, things like that, but enough quality that people can come to us and say, hey, listen, I don't have to worry about getting, a negative 99% in the first day. I think that there's some opportunity here. Um, in terms of like actual onboarding capital and how I see it and how I think that this model actually wins long term, what our attack strategy is, and we're not there just yet, probably next couple of months we'll start doing this, is as we go to, we'll start with VCs that are kind of mix of Web 2 and Web 3, which there are some. There's some quite notable ones that do that. As they start seeing the value of a liquid market for some of their investments that are completely illiquid, that they might want to rotate out of or, maybe borrow against, whatever they want to do, I think that they're going to start seeing the value of the tokenized equity, whatever you want to call it, opportunity, and start influencing other founders and other teams to actually come on board, whether it's us or a different platform, to actually tokenize earlier on, right? It's tough for private equity because these things aren't liquid until so long after their investments. And if you can get the right demographic of retail participating earlier on, they're able to hedge their bets. They're able to get out from companies that they think are a zero, probably offload them on retail. I hate to say it, that's just the reality, but like they do it in the public stock market too. So that's like, what the hell is the difference? But I think that we'll see a world where pretty much everything becomes tokenized to some degree, just because IPOs and public markets are just so inefficient and so slow. And I do think there's some perks to that. There's also a ton of negatives.
Maybe I was going to ask a little bit more about SOAR itself, but before that, since you mentioned IPOs, I am interested, like your thoughts there. This is something that I think as well has become kind of an interesting conversation. Is we have all of these launch platforms, and they're for ICOs, which are not IPOs, of course. They're for tokens, but IPOs typically do have some kind of at least some loose rules around them in terms of if you participate, maybe you can't flip for 15 or 30 days after, or you get after one or two times you get kind of banned from participating in the future. There's some various other things like that. Some platforms have size, sort of minimum size requirements and other things along those lines. But I'm curious if you have any thoughts there. Like, can it truly work in terms of a fully like truly permissionless, like anyone can come in any amount of size, like anyone can buy day one, sell day two, or do we actually need to consider some of those like kind of existing kind of like simple rules of thumb that get followed in the traditional equity world?
Yeah, that's a really good question. Um, yeah, any rule that is traditionally followed in Web 2, I think works, to be honest with you. And I think there's a lot of reasons, right? It's kind of like when you're a startup, you look at like some of your competitors or some of the more notable products in the space, and you know that they spent millions of dollars doing research on why this button is here and this color is here, right? You kind of copy all of those things. So I think that, yeah, I think that some of that stuff, I know Coinbase kind of tried that same thing with Monad, right? They have some type of score. I know there's some other people on Solana that are also coming out with some type of reputation scores and on-chain scores. I think it's hard because, like, an on-chain score, I have hundreds of wallets, to be honest with you, from back in NFT days. Some of them probably have great scores. Some of them have horrible scores. Some of them might have scores at all. I think it's hard just because of the fact of the multi-wallet issue. If you want to do stuff like that, we kind of go back to, like, in my book, KYC and KYB and all this other stuff, and AML stuff. And that also kind of goes against the ethos of crypto in a lot of ways. So it's hard, man. Like, you're balancing a lot of different things and a lot of different opinions. I think that there are reasons to say like lockups and, like you said, like anti-flipping stuff to some degree. But they're also liquid markets, man. Like, I like markets to be liquid when they are. I don't like the idea of going against destroying a liquid market by rules that really just there's no point to enforce. So, but I'm always in favor of Web 2 stuff. Like, I think that they have a reason for all the things that they've done for a long time.
Fair take. I think it's a difficult sort of set of problems. Like, flipping is a good example, but also just like having caps and lockups and all these things. It's like when you can make as many wallets as you want and fund them from different places, you run into those problems. And like you said, then you get into do you have to go to KYC? And then if you go to KYC, do you kill off all the interest, right? Because
Going right backwards.
nobody wants KYC, right?
Yeah.
All right, maybe about SOAR then. I was going to ask because I don't think we've talked about it, but every business is going to tokenize. All equity is going to become tokenized. As far as I understand, SOAR doesn't have a token today. Is SOAR going to have a token? Like, what are the plans for the platform? Maybe over the next 6 to 12 months. And what are you guys thinking about? Not just for your users and your investors and founders that onboard, but for yourselves for SOAR.
Totally. So, yeah, first question, probably, yeah, most likely. Like, we would follow our own model. I think that our model's really cool. Anyone that comes into a round and think that then future rounds will be exposed to the same exact model that we encourage all of our teams to do, right? And they're required to do at the end of the day. In terms of like future plans, like I said, I mean, genuinely, people will call me crazy, but our goal is to tokenize as many companies and bring them on chain as possible. I think that it is attainable. I think we're in the right time, right place, to be honest with you. It feels like we're at the spot where, RWA and all this tokenization stuff is starting to heat up. I think that obviously legislation is moving in the right path for us. I do think that it'll take some time for like anyone who thinks that clarity or anything like that is going to completely change how, securities operate and things like that. Like, it's not how it works. Like, it'll take time. We're probably a couple of years out from anything actual tangible, but you have to get ahead of the curve, right? You really got to kind of dig your feet in and try to be the best place for, retail to come and get and participate in startups. And then on chain, like I said, best place for founders to kind of go and raise money. Short term, we have a mobile app coming out probably in about 3 weeks. It's hyper focused on retail. It's hyper focused on taking away all the scary things that crypto presents. You don't even really feel like you're playing with crypto, to be honest with you. Like, there's no, depositing Solana or anything like that. You just kind of deposit cash, Apple Pay, etc. You can then go and look at your portfolio. It's kind of akin to Robinhood, etc. Not a lot of charts, to be honest with you. We've kind of moved on from the charts. We think the charts scare people too much. We want people to just kind of log in, take a look, maybe shop around, think about different opportunities that they might like, and find things that really appeal to them, right? So that's the hard part, because we're building a marketplace at the end of the day. Like, I've had a marketplace acquired in the past. I've worked in marketplaces a lot. You have to find the buy side and the sell side, right? The sell side in our case is the companies that are tokenizing, and the buy side being that user base, right? And like, it's always the question of like the chicken or the egg with marketplaces, like which one comes first. In our case, luckily, we've been blessed that I believe that our model and just Launchpads in general, if you want to call it that, have some PMF with traders and with crypto in general, right? There's always people that are willing to trade tokens or find opportunities in crypto. So that's the cool part. Now we just need to mass onboard the opportunities while also filling out the liquidity side as well. So next 3 months is purely dedicated towards getting the app up in the App Store, trying to introduce people that normally would not be trading this stuff, give them the opportunity to do so. We have some pretty interesting tricks up our sleeve to do so. But most importantly, man, it's quite simple. Just find the best companies and best founders, pound the pavement as much as we can. We're going out to San Fran. We're getting an office there quite soon. We're going to be in person a lot, grinding, finding shout out to like Avi Patel, but like those type of people, like he's crushed it with Kled. There's some other guys that have just crushed it. Like, they turned a little bit into a huge opportunity, and that's possible, but you need the numbers, right? It's a numbers game. We're not solving venture capital. We're not solving startups. Like, people always ask us about that. Like, no, I'm not aspiring to solve the problem that is most companies fail. It'll never be solved. Like, there is no fundamental right answer to that question or that problem. We're just trying to give people opportunities that they can believe in, that they can participate in, that they can even help, right? Founder A, who owns a consumer app, be their big evangelist, right? Like, there's a huge bunch of case studies about people that invest in public companies. They are way more loyal to that brand over time. Like Ford and Toyota, I think, are the two that are the most like that. And you can get that same experience through SOAR and through a token. You could be these guys biggest cheerleader, evangelist, connect them to the right people. Like, that's the really cool part about crowdfunding, if you want to call it that. Unfortunately, phase one of crowdfunding, when it was off chain, didn't work because it was a joke, right? Like Kickstarter and all these other products. You get like, you buy it or product and then you actually never even get the product, which is comical. And then phase two, if you want to call it that, which was ICOs, and now we have like Believe in all this other stuff that was before us, failed because we didn't get the legal side and the connection side and the intrinsic value side. I do think we've hit the spot with token model, legal experience, opportunities, right time, right place, to really crush it. I'm like hyper bullish on us. I'm hyper bullish on our team. Like I said, people will call me crazy until I'm right. It is what it is.
Hell yeah. Well said, Tom. It was great to have you on. I'm glad we could do this today. Glad we could hear more about what you're building at SOAR. I personally have been trying to follow like everything. You said you're not really. It's weird. We went through this like branding of everything is internet capital markets. Or at a time, it was like internet capital markets was like raising for things on chain, and now
Correct.
internet capital markets is actually just anything that happens on chain. So it's become sort of a catch-all term now.
It
But
has, like
solving
everything, like
solving
DeFi
tokens,
was. Yeah,
solving tokens, and like I don't know, ownership coins, or maybe it'll just end up being tokenized equity. We'll find the right terminology when we get
we
to
will.
the end state. But yeah, it's been a great kind of sector to follow. So I've been keeping up with Source. So glad to have you on and chat. And you called yourself arrogant, but at least it makes for great content for the viewers out there. Hopefully.
I hope so. I try to be as entertaining as possible.
Heck yeah. Well, I love
I
that.
appreciate
So
it so much.
yeah, thanks for coming on, and to all the listeners out there, we will catch you next time. See y'all.
Awesome. Thank you.